Good morning, everybody. Lisa Mesri here with RE/MAX Top Producers at our Friday morning 9 a.m. real estate discussion. Today I've got John Gih with loanDepot, and we're going to be talking about first-time home buyers. John, thank you so much for joining us today. I appreciate you being here.
Thank you for having me, Lisa.
He's going to go over a number of different loan programs he has. We're going to answer the questions, how much you need to be able to put down on a house with different loan programs that he has, as well as how much closing costs you're going to possibly need. If you purchase a home for a certain amount, how much will your monthly payment be if you put down a certain scenario? So he's going to go over all of those questions. So if at any time you have a specific question while you're on and watching, go ahead and make a note in the comments, and I'll be able to answer those questions for you as soon as we can. Okay, John, thank you for being here. Go ahead and start.
Most importantly, before you even start shopping for homes, it's very important that you speak with a loan officer to properly plan your roadmap to home ownership. It's important that you understand what you qualify for and what monthly payment you're comfortable with every month to maintain your lifestyle. A lot of people try to buy the biggest house that they can and ultimately regret it because their monthly payment is so high that they don't have time to go out for date nights and movies.
So basically what he's saying there is you may qualify for $1 million house, but if you want your payment to be $3,000 a month, we're not going to let you buy $1 million house. We're going to keep you somewhere more where you can keep a $3,000 payment.
Another reason that's important that you find out what you qualify for before shopping is a lot of people will go out and fall in love with a house and ultimately find out that they don't qualify, which could be heartbreaking.
Yes, so that's one of the rules that I have. I won't take a buyer out unless we are pre-approved because I don't want that heartache for you. It has happened in the past and we learn from our experiences. So buyers, please get pre-approved first. That's the very first step because of the fact that way then if we qualify you for a certain number, we can go take a look at those homes and then discuss from there if those homes work or if those homes don't work. If we need to adjust the financing a different way, we can go over that with the lender as well.
A lot of people think that the home buying process or the qualifying process is very difficult. The process with loanDepot could not be easier. Some of my clients even qualify for day one certainty, which means that we are able to verify all of your data electronically for an automatic approval, and we would just have to wait the 8 business days that the government has implemented. That is the waiting period to ultimately sign loan docs and close the home. When you're able to provide little to no documentation, this makes the home buying process much easier and stress-free.
Question for you, John. When someone is interested in purchasing a home, maybe they're just thinking about it and they're just in the early stages and they're wondering what their credit should be. What's the different programs that you have with different credits? What does the credit look like? Those kind of answers. What can you answer that question?
So we can work with the number of different credit scenarios. We can go as low as 520 credit score. It's very important that you, even if you're thinking about buying a home, that you keep your credit where it is if it's already good, and if it needs some work, give us a call and we can work on repairing your credit. And sometimes it may not be immediate, sometimes it takes up to 6 months. There could be things that need to be paid off, judgments that need to be cleared. And all those can be handled ahead of time so that there are no surprises when you're actually in escrow during the home buying process.
And while you're doing your home buying process, don't touch your credit at all. Don't go buy furniture. Don't go buy a new house. Don't buy another car. Don't do any of that because we want to make sure that we get you those keys because a lot, I'm sure loanDepot does it as well, is they'll run your credit right before we close escrow. And if that debt to income ratio has changed or if you added another loan on there, now it could put you out to where you don't qualify for that home anymore. So please, once we get you pre-approved and we've got you ready to go, don't run your credit, don't charge anymore, keep your credit cards exactly the same as they are so that way then you maintain that credit score and that credibility for you. We can always do a program for you to where we can help you if your credit isn't right there yet. We will walk you through, as John was saying, be able to say, okay, this is what needs to be paid off. Let's get a game plan together. Let's save this much so that we can have you then purchasing a home in 6 months or whatever your goal is so that we can make it happen for you. Just because it's not ready now doesn't mean you're not going to be ready in a few months.
One other thing is that you shouldn't move your money around. If you have cash hidden underneath your mattress, don't deposit it when you're in the home buying process, because the underwriters will see that and they will ask, where did this money come from? If it's not sourceable, we may not be able to count it or use it towards your down payment or any of your closing costs.
That's a good one. I always forget that one. Okay, so tell me about the different programs that you have for being able to get qualified.
So there's a common misconception that you need to have 20% down to buy a house, which is completely untrue. There is a little bit of truth in the sense that if you have 20% down, you will not have to pay for PMI, which is private mortgage insurance, and that's the way the lender feels more comfortable to loan you this large sum of money, because you don't have as much equity if you're putting a lower down payment than 20%. There are different programs. The conventional loans require as little as 3% down, and there's FHA, which is also 3.5% down, and we can go as low as 520 credit score on that program. And sometimes you can find a house that might have all the great bones, the perfect structure, and it just needs that personal touch. We can also do renovation loans where we can loan money above the value of the home to help you spruce it up, to remodel, do some paint, maybe work on some plumbing. There could be renovations in the kitchen that need to be done, and those can be financed all at the same time. So it's like when you buy a car and you want to add some accessories on there and you can finance it all into the loan. It's very similar to that. For those of you that are veterans, thank you for your service. There are also VA loans. The statistics are that 60% of veterans don't know that they are VA eligible, and with the VA loan you can do as little as 0 down. With all these down payment options, one thing to keep in mind is that you need to save money for the closing costs. That's something that a lot of people forget. That covers your title and escrow fees, and sometimes if you're putting less than 20% down, you'll need to cover the prepaid items, which is your property tax and insurance, because you need to pay those ahead of time so that when the property tax and insurance is due, that impound account will have sufficient funds to pay for those items when they become due.
Okay, so let's go for an example. This is why we recommend that you speak with a lender before we start purchasing a home, so that we can go over the different programs, and that way you can find out what is education for you, so that you know exactly which kind of a program is going to be best for you. We're just going to go over 2 different programs today, so that way you can have an idea of what kind of down payment you're going to need, including closing costs, and what kind of a mortgage payment you can expect to have at a certain purchase price. So let's go over a 3% down conventional that you're going to do first.
Okay.
Let's try that one first.
So in our area, $400,000 can get you a pretty nice house. With 3% down, your monthly payment, including property taxes, homeowners insurance, and mortgage insurance, would be $1,995, and that is something that can be done with just an income of $5,000 a month. Granted that you don't have any additional debt.
So what we're talking about, debt to income ratio, is basically how much money you're bringing in, net or gross? Gross. And then minus whatever debt that you have on your credit. So it's going to be any car payments, any student loans, any credit cards. All of those are going to be a portion of it. And what is your ratio that you need to have for yours?
Depending on the program, we can either do 45, 49, or 55%.
So basically your house payment can't be 50%, 49, or 48% of what your gross income is.
Yes.
Okay. At that $400,000 example, with your payment being $1,900, how much down payment would I need to put down?
The down payment would be 3%. 3% of $400,000 is $12,000, and let's just factor in a little bit for your closing costs. So total all-in cash would be around $18,000 to $20,000.
So basically, guys, buying $400,000 house at a 3% down, you're looking at a roughly under $20,000 to be able to come in with. You're not needing $90,000, not needing $100,000 down. Now, granted, if you have those kinds of money and you wanted to put that kind of money down, you're welcome to, and that'll obviously bring down your monthly payments, so that is another option that you can do as well. Right now, we're just going over the bare minimum scenario, because a lot of homeowners, and especially first-time homeowners, it's very difficult to come up with that initial down payment, and that's why the lower down payment the lower down payment programs are better for first-time home buyers to be able to get you into the home. Keep in mind there are a lot of homes that have newer developments are going to have higher property taxes, so that may change their monthly payment based on that. And also they may have an HOA, so that'll increase your monthly payment as well. So we need to keep that in mind because those are part of your debt to income ratios as well. A good rule of thumb is most of the newer homes are going to have a Melrose, or they're sneaky about it, so to speak, that they're changing the name of the Melrose. They're not calling them Melroses anymore. They'll call them an FPCD bond or different type of bonds, but they're all just a Melrose in another language. But when we sit down with our lender and when we're looking at houses, that's my job to make sure that you're aware that this has a higher property taxes and this one has an HOA, and then you can base it on that. Just because there's an HOA and higher property taxes doesn't mean it's a bad thing. It's because it's a new one. The extra property taxes are usually there for about 40 years just to help pay for the new roads and the new schools and the new lights and stuff that are all being put in. So that's why the newer developments have those. Okay, so that was the 3% down. Is there anything else with regards to the 3% down? On that 3%, what was the lowest credit score you can go?
3% down, we can go 620.
620, okay. So a 620 credit score can get you pretty much into a home with $20,000 down, buying a $400,000 house, which will get you a nice. And then we've got the next one we'll go into is we'll get into the FHA program, which is the most common program for first-time home buyers because it helps with the lower credit score. You don't have to have you don't have to have a 640. It also will help you guys, first-time home buyers, because it is backed up by the government, so it helps out in regards to that.
Right.
You do have a little bit higher of PMI, so the PMI is basically protection for the government or the lending company to be able to make sure that you're going to still make that payment. So the conventional loan will have a smaller PMI, but the FHA will have a higher one. So let's go into the same scenario with an FHA. What's the lowest credit score you can do in FHA?
520.
520. So more credit challenge, we can be able to still get you into a home. You'll need to put a little bit more down because it'll be
just a 0.5%.
0.5% more, so it'll be 3.5% down. If we're buying a $400,000 house, sticking with the same scenario, what are we looking at?
So with a $400,000 house, 3.5% down payment would equate to $14,000. Let's throw in the closing costs, and that would be about $21,000. Your monthly payment for just the principal and interest is $1,927, and your total monthly payment would be $2,677, which would include property tax, homeowners insurance, and mortgage insurance. Sometimes if you have a really good credit score, the FHA PMI might be cheaper than a conventional. And of course, that's why you need to call me so that I can go over and see which monthly payment works out the best and which scenario works best for you and your family.
Because every situation is different.
Very different.
Lots of different numbers going in, lots of different figures going in. We want to make sure that we all have the same common goal of getting you your home. And that's what the number one thing is. Always make sure that you're educated and you have all different scenarios, and you won't have to make that decision that day. Well, I'm going to go with this loan program, or I'm going to go with that loan program. We want you to be educated so that you can know the difference in the different programs that we have, so that way you can then make an educated decision what's best for your family, because every family is different. Is there anything else you'd like to add?
Lisa, just to circle back on when you were discussing Melrose and property tax, Lisa is an expert in the Chino area. But one community could be right across the street from another one, and the property tax could be very different. So that's something that you need to keep in mind. Usually it'll be a newer home that will have that higher Melrose and overall property tax payment, which could make a big difference.
It can. All across the board, the way that property taxes are done is basically the entire city has the same property taxes. So that way then, but then there's certain portions that may have an additional here or an additional there. And sometimes the voters voted to have an additional school bond put on for a different school district. So even within the school district, you might have an additional school bond as well. That could be temporary, or it could be for a while. So there's lots of different scenarios, and that's where my job comes in, to make sure that you're aware of that, and we can go over it before we decide to put an offer on the house, so you know what your payment's going to be, because it may be different than the house that's across the street.
Right.
Absolutely. Anything else?
One thing to keep in mind is that the area that you look at may have different loan limits. So different counties have different loan limits, and in Chino, San Bernardino County?
Yes.
So in San Bernardino County, the loan limits are lower than Orange County and LA County. And when you need to buy a house that your loan is greater than the county loan limit, there are also jumbo programs. And we at loanDepot actually have a 5% down, no PMI jumbo program, which is very useful, especially in San Bernardino and Riverside County.
Okay, so if you're interested in looking at possibly purchasing a home, if you're just wanting some ideas, wanting to get a rough idea, we don't have to run your credit right off the bat. We want to just come and sit down and have a consultation with us to be able to go over your specific scenario. Everything will be obviously confidential between just us, so anything that's said in here would not go anywhere else. But if you want to do that and sit with us, feel free to give us a call. John, what's the best way to contact you?
The best way to contact me is either by phone or email. My number is 951-218-2625, and my email is jgih@loandepot.com.
And of course, my name is Lisa Measure with RE/MAX Top Producers, and my direct phone number is 909-583-7844. Give me a call, send me a text, or message me here, and I'll be able to contact with you guys, whether you're buying or selling. Thank you so much for joining us. Join me next week on Friday at 9 a.m. I will be coming live at Indian Wells as the CAR director. We have our meetings next week, so I will be coming live there and interviewing and going over the actual process for buying a house and the steps and what you can expect with regards to all the steps that are involved in purchasing a home. I'll talk to you guys on Friday. If you have anything else, just drop a comment. Thanks, guys.
Thanks for joining us.
Bye.
And have a great weekend. Bye-bye.